What is going on, and good Sunday evening, January 22nd, 2023. I know it's a little bit later than usual for tonight's stream, but we got to get it done anyway because we got a pretty big week ahead, and we are looking. I got Bitcoin pulled up. I'm not really sure why I got Bitcoin pulled up, but nonetheless, Bitcoin, we're looking at futures right now to start things off. I'll pull up the S&P futures. We'll pull up a bunch of charts like we always do, and maybe we'll take a look at some small caps towards the end of today's stream. Hope you guys are doing good. And I figured that we'd run the live a little bit later because some football was on. I was just chilling, watching some games, and just relaxing for the majority of the evening and the weekend. My Eagles got the job done. We'll be back at it next week against the Niners, and we'll see what we can do. Of course, it's funny. I went to that. If I go back, or I'm pulling up the S&P futures right now, by the way. I'll go to the 5-minute chart. They are down barely, 0.08%. I went to the first loss they had, of course, the game that I went to. Back in, I forget what, it was back in October, but of course that was the one game that I went to, but so nonetheless, they've been my team for as long as I can remember, as long as I started watching football, and we keep on riding. So S&P futures right now down 0.08%. We kind of have, I guess you can almost call it a bull flag, although it's pretty low volume, and it's just, early futures trading, off what we had so far here to finish the day on Friday. A big pump on Friday. There's a lot of stuff going on, though. We got to talk about what we have upcoming for the economic news and so forth for the upcoming week, because there's a lot of stuff. I think a somewhat backloaded week in terms of economic news. Let's pull it up first and let's start diving on in. So nothing on Monday. We have leading economic indicators. I don't think that there should be. It's at 10 a.m., so it's a little bit after the market open. There could be some reaction to that. Tuesday, we have U.S. manufacturing PMI. Those, somewhat substantial numbers, I would imagine, but we shall see. It shouldn't be a massive market moving. And I kind of pissed. These two releases coming out 10 a.m. These are Eastern time, like 10 a.m., half hour after the market opens, and then 9:45, 15 minutes. Like, can you just put it out before in the pre-market? You know what I mean? Nothing on Wednesday. Then Thursday, you got your jobless claims. You got some other good stuff going through: durable goods, trading goods, core capital goods orders. And then we have on Friday PCE, core PCE. These should be some pretty big numbers to be watching out for. So that's the big deal. I think as we some little releases early on in the week, but as you get through like Wednesday, things are kind of quiet. And then Thursday, Friday, we get some more notable economic data that should be a lot more interesting. So Mike is buzzing. Jeez, man. You know what's funny? I was trying to fix this, or I wasn't trying. I guess I was messing around with the settings. Let me just see if I can reset it really quick. Give me 2 seconds. It might cut out for a sec. Okay, we're back. How does it sound? I was messing around with it the past couple of days, but I haven't really been able to figure out what the issue is. I've done nothing different from weeks and months ago. If it's bad, I can potentially try something else, but let me know if it sounds horrifying. I'll probably check it out tomorrow or just even later tonight and get a feel. But we will see. NASDAQ futures, we can pull it up. So this is the S&P. It's down 0.07. It's roughly going to be very similar. The NASDAQ, I don't have it pulled up right here. I can find them though. So the Russell 2000 futures are down 0.02. God, they're kind of honestly flat. We just finished super strong to finish off the week. Cause of that sounds fine. Check cables. I popped the cables. I've unplugged them, replugged them in a bunch of times the past couple of days, and all the connections have looked good. But I think I looking back through some other stuff, I hear what you're saying. There's a slight, if I was to stop and you turn the volume way up, you hear a little bit of a buzz. If I'm not mistaken, that's the same issue. But dollar down 40 more cents. Let's check that out. DXY. Yeah, look at this. Here's a 5-minute chart on DXY. So here's DXY finishing off on Friday. Pretty much opened up, popped off the open, or popped in the morning on the dollar, and then immediately reversed, gave it all back, and started to go down. The dollar, it's just a week, man. It's just a week. That's just going down. The key spot on the dollar is like down to 101.25 roughly on DXY. So we'll see. Tesla earnings Wednesday. Yes, Tesla earnings Wednesday. So like while Wednesday's a quiet day in terms of economic releases, there's Tesla earnings. So that's going to be fun. Yep. Made some smash burgers. I had some Five Guys this evening. First time in a bit ripping the Five Guys, but we had some Five Guys. You know, you always go into that scenario feeling pretty good, like, oh, it's going to be great. And then you come out of it like, you know, I feel like shit now. But it is what it is. Watching football on a Sunday, I'll take it. Natural gas screaming upside, cooler weather coming. Yeah, let's talk about that really quick too, because we talked about it on the, here's nat gas. Here's the chart for nat gas. So, I mean, I had a level that I was looking at around this 3.5, 350 area. The thing has been straight down. Obviously, if you're jumping on the long side, you've kind of been trying to catch a falling knife, and you think back to this thing and you're like, you know, man, at some point this thing is going to bounce. And I thought it was going to bounce earlier. I got stopped out in the trade. I originally liked it short, you know, back a few months ago, back up in here. You know, once we broke down below this, I liked it short. Never got the entry that I wanted to. I've said multiple times, I missed it. It is what it is. Would have been a legendary short to the downside, no matter how you played it. Boil short, cold, KOLD long, the leverage ETFs on natural gas. But I want to pull up some of the weather forecasts. I know this is like kind of nerding out on this stuff, but it's interesting to look at just to get a good feel, because we talked about it on Friday a bit. But let's just peek in and look at the 2-meter temperature anomaly. So here's the US. I'll go to Europe next, just so that we can get a kind of contrasting view of what's going on there as well. And essentially the deeper blues and pinks, colder than average. And then the reds, the really warm colors, are like warmer than average. So you want to see for you know, colder than average forecast. And the winter's been pretty warm, to be honest, man. So like, look back, if you're in the north, if you're a northeast skier, I feel horrible for you. The season has just not been good. I mean, maybe you got some select couple days up in the mountains if you really live close to the mountains, but I used to live in Connecticut, and we'd have to drive, you know, a couple hours. We'd have to drive like 2 hours to the Catskills. Essentially like not deep upstate New York. It was upstate New York, but not like all the way up there. It was kind of like essentially like right across from like the northwest corner of Connecticut, like right across. There's some mountains there. And then if you were to go up into like Lake Placid, been there a bunch, up in Vermont, like Okemo, Killington, like those mountains. Yeah, maybe you've had a couple of days that have been a handful here and there that have been decent, but it's been just pretty bad across the board. Well, then you look around and you look at your friends out west, and holy shit, Utah just getting absolutely crushed. California crushed. Like Idaho crushed. It's insane, the skiing weather out there. But that aside, by the way, for those who are not aware, I literally have a degree in meteorology. That's like part of my degree. So I have a lot of experience in this stuff and looking at this stuff. So you look at this, like, yeah, you see cold in the mountains, but like that's not that meaningful. There's less people out there. It's not going to be as meaningful for energy prices and stuff. So you really want to see cold kind of seeping down through the central and eastern half of the country. The worse that is, the more like media attention, the more, you know, you hear the cold and that all that stuff gets talked about, the more meaningful it is. It really doesn't get that bad. And you have some of these cold shots here and there. The bigger one starts to come down late January into early Feb. Here is where you get something right here. This one starts to seem pretty impactful. January 30th. Now, of course, this is getting, you know, a week plus out. These are subject to change, but the general idea is what we're looking at. And forecast models can do a pretty good job going a couple weeks out on the general idea. The specifics don't even bother looking at that stuff. But as we kind of see, general pattern trend is a quick shot of cold, then it warms up, and then we kind of have these like small shots of cold coming through, but nothing like super meaningful. So you've got a little bit of a shot there, at least that's for the US, but to be honest, it's short-lived, kind of like how we had back during around Christmas time, I believe. You know, we got cold for a bit, then it warmed up pretty fast after that. Go to Europe and let's peek out what's happening in Europe. Same idea. We're looking for like, you know, the big rushes of cold, and if we don't see that, you know, it seems like right now we've got a pretty decent pattern of like Western Europe is like kind of cold in the mountains, and then like Eastern areas stay generally warm, and that stays going on for a while. It gets a little bit colder here towards February, but it stays like that for a while. So nothing like insane. This is a bit colder than average, so maybe it starts to regulate and prices kind of bounce back. But it seems like natural gas, a big part of the move down had to do with how warm the forecasts have been. Of course, that can change, and it probably will change at some point, but we shall see and keep an eye on that. Things get priced in way ahead of time, right? So just because we're looking at a forecast for next week doesn't mean that it's like, oh, it hasn't been priced in and I'm going to be ahead of the game. No. These things are getting priced in way, way ahead of time if the cold is actually a big factor at play here. So just keep that in mind when, looking or even, when you're looking at that type of stuff. But we'll see. Okay. Cold weather reaching oversold. I mean, look at this chart. That's pretty freaking oversold. And the volume is kind of calmed down too on natural gas. Like the volume, look at the volume on the bottom of our screen. It's like just trending down. So you have a big move down off of lower volume, which, you tend to want to see higher volume come in for, a substantial or sustained move. You kind of want to see higher volume, on that to be more, I guess, impressive and more, I guess, meaningful. Anything could happen. That could change fast, and you got to look at natural gas inventories too. But that's just something to keep in mind. Volume has been slowly decreasing, generally speaking, on natural gas through this decline. So can it balance $1? I think so. It could easily do that. The question is really when. Gold and silver. Let's talk about silver and gold. I mean, silver right here is just at this rough trend line. It's not a perfect trend line by any means, but it's coming up to that level. Could it be a bull flag? Could be. Certainly, it's just in this consolidation phase after a big move up. A move up over 24.50 on silver, and I think we got some big time numbers coming. 25 could be in the cards on silver pretty soon after that move. So we'll see. Keeping a close eye on that. Gold, man, is a beast. Gold is getting up into the relative highs. These are starting to get to points where, like, I'm kind of just like, they're getting overbought, sure, but do you want to short this stuff and fight the moving train? I don't know if you want to start standing in front of this train. Especially the best way to look at this, in my view, is, okay, how are gold and silver doing versus everything else? Relative strength versus the S&P, yes, we've been seeing that. Relative strength versus the NASDAQ, yes. Well, what about versus the dollar and stuff? Obviously, when the dollar drops off, gold and silver tend to rise. It's kind of an inverse correlation. And if I look at this dollar, man, and I'm like sitting here saying, okay, here's the dollar's daily chart. We'll see what the dollar does tomorrow. And if this move down so far in the early session continues to hold, if this continues and the dollar starts going down under 101 and we're flushing off, that gold and silver move probably continues. So that's like the biggest indicator. The charts they're kind of getting up into spots that at this point in time, I'm like, okay, they've gotten to some pretty nice spots and they've gotten some nice moves off the lows. At this point in time, I think you're watching the dollar as a better proxy for where we're going next versus trying to watch those charts and try to guess, based off of what we're seeing there. NVOS. Let's jump into some smalls. I'll jump into some small caps. We'll do a little reverse order. We'll go small caps, then we'll go into like the big pictures, large caps. I'll pull up my list. Let's go through the small cap list. NVOS is like one of the top ones on the list because of the volume. Now, they've been issuing a lot of shares, I believe, the past couple of sessions as well. But the volume is still freaking massive. The past 2 days, trading over 20 million shares. This thing has never traded nearly that amount of shares. We have seen time and time again over the past couple of weeks and months, the past like 2 months maybe, more specifically the past like month or so, maybe 6 weeks, that when these things go off to new lows and they get absolutely loaded for almost no reason, they have been run pretty substantially. NVOS has had some of these higher volume days. It's had a couple little these false pumps or whatever you want to call them, just straight pumps and dumps. It's now down to new lows. So anybody who caught in on some of these pumps the past couple of sessions or the past couple of weeks, you are now probably underwater huge, like absolutely huge. And so that's generally how they like to do these things. They manipulate this stuff, rip it down to those new lows. Then then volume comes in as we're seeing. Then eventually they run it. Whether these things get delisted or they get, positive news, it doesn't matter. It's all about, it's just pure manipulation for them in the meantime. So I like what I'm seeing. It came down to like 10 cents. I ideally would like to see it hold 10 cents. Like, sub 15 cents was kind of like my, really under 13 really was like my target to like start playing it. And that's what I got in terms of some shares. I'm not in, huge by any means, but In terms of some gap fill ideas, like, this is a gap fill to 60 cents. Did it have to get there? No, but could it get there in a pre-market pump? Oh, yeah. We've seen some crazier moves on some of these stocks over the past couple of weeks. So looking for something like that. If it spikes 50+%, I'm all out no matter what. So it doesn't really matter. Obviously, I scale out on plays like that. But if it spikes 50% and it starts to kind of fall back off, I'm not going to let this thing go back down to go red on me. So it's getting sold at some point no matter what. If it has momentum and it wants to go higher, then great. I'll hold some shares and slowly trim some off. I have some sells set along the way already. Maybe 25%, 50%, 75, 100%. And if they hit in the pre-market, if they hit when I'm not watching, great. And then I usually see them on my phone notification. I go check the charts. Is there news? What's going on? Try to get a feel for what's going on. And then we'll adjust my next sells accordingly if I need to. That's kind of how I've been playing that stuff. But I think it looks pretty valid. NSPR is another one that has been really wonky. Price action, pretty volatile, but it's got some good volume the past couple of weeks as well, past couple of months. So I'd be keeping an eye on this one, especially big wicks to the downside that get bought right back up. SDC already kind of pumped. It could go for more, but it already pumped pretty nicely from 30 cents all the way to 90. After a move like that, I probably will toss it off the list. The only reason why I'm going to keep on the list is because it had that short squeeze kind of feel, or that short squeeze kind of run back here in July into August. And so if I ever see a similar pattern, where the thing starts to hold a low, consolidate for a bit, build some higher lows, maybe I would take a closer look at it. So I'll keep it on the list for now. But after a move like that, I'm not really looking at that. AYRO has done great. It still looks pretty strong. Off those lows, man, it hit 35 cents, then ripped back up. Now it's up near 70. It's kind of putting in almost a bull flag up over this on AYRO, up over 69 cents. And it looks like it wants to go for more. Could be looking at a move up towards 75 to maybe, dare we say, 85, 90, and maybe even $1 I could be looking for. On that DBTX, not super interesting chart-wise, but it's got some better volume, but nothing insane yet. ACHL we've talked about in the past, got absolutely loaded, jacked up here in the 70s and 80s. It's now back up in the 100, or not in the 100s, up over $1. Lower volume now, but it's got a low. But notice this though, right? What are we seeing on this thing? ACHL. This actually is a valid idea. I mean, I am maxed out on what I'm holding, but if I, sell any of my other stocks, I may look at this one. What do we see? Low volume consolidation. So you had a big move up off of high volume. Now you have a consolidation. It's still holding up, but it's on low volume. Those are some decent consolidation phases to look at potentially buying into, with a stop loss maybe down below $1. The problem with these small caps is that they are manipulated heavily, very heavily. But I like what I'm seeing in terms of that low volume consolidation. So if you didn't want a bottom pick and you're waiting for confirmation, well, you kind of got a huge loading of volume, and now you got a low volume consolidation. This would be a realistically, a decent opportunity. WISA pumped, I think, last week on Thursday, Friday. Yep, it already filled that gap, so that one's probably off the list for now. SRZN is doing the same kind of deal. It's in this, again, consolidation phase. High volume here, popped a little bit off those lows. Now it's lower volume consolidating. Ideally looking for a move up towards $1 on that thing. It's down around 63 cents. FNCH, big time move up in high volume. Well, dumped off high volume, bounced. Volume was still relatively high. Now volume is kind of fading off a little bit. It's just kind of chopping around 50 cents. NXTC, parking off the lows a little bit. BOLT, huge volume back here in late December. Those lows, this, by the way, check this out. Check these wicks. Now, some stocks will have more volatility than others. Look at these massive wicks off of this big volume right here. Just tells me somebody was soaking or loading or whatever you want to call it. Everyone has their different freaking weird terminology. Soaking the dips. Like, someone was buying that. That's all it is. Someone was buying that, and it was probably hitting some stop losses at the same time, because when you have a stock that kind of nicely holds bottom or nicely kind of puts in a nice, multiple touch low, then when you dip below that, guess what? A lot of people are putting stop losses below that. And so you're hitting some stops, and you've got a freaking buffet of shares. If you know what you're doing, you're watching that closely, essentially, on those stops. IGC, meds we talked about, kind of getting ready for something, I think, here soon, but it popped already from a low from 25. It already went like 100+%. So maybe just relax on that. METX, Grom looks good. I like what I'm seeing on Grom, GROM, for a move to $3. So it's at like 172. It's a pretty good risk reward in my view. The thing is though, is that you'd want to try to buy it, sub 150 if you can get it there. It may never come. So if I'm looking at this, I see the nice lows down here, down to like 112, pretty decent range, right? But I got some higher lows here, 125, 135, 132. I'd want to see those lows like roughly holding, ideally. But I'd want to be buying something in here if I can get that like next week. So maybe it's worth putting some bids at 150, putting a bid at 140, maybe 130. If they fill, great. You have an average, somewhere in the middle, and then you can kind of watch it. And if it starts to break down under, let's say, 125 for like 2 sessions in a row, we get a close under 125, maybe get out or watch the news. Be paying attention. But this thing has a setup right here where you got a gap to fill up here to $3. Even a small one up here to 8. Not that it's going to go that high. Who knows where it's going to go? They can go to 0. They probably will go to 0. But they just did a reverse stock split. So that's generally set up for a run at some point, and it may be getting close. So that's the deal. Let's see. VGFC. Interesting. The very good food. This is a stock that probably a scam. I'm gonna say a scam, but like I'm sure they're like a legit company because they I remember this is like back in 2021 or 2020. They reached out to people who have like YouTube channels, and they reached out to me and they wanted me to promote their stock. That's what they wanted. They were like, "Oh, we'll pay you to promote our stock." I'm like, "What the fuck?" I'm not like, no. But a lot of people did that stuff. A lot of these guys who did the top penny stocks videos to buy, they would get paid from these companies, and they would, say this is like the best thing ever, blah, blah, blah. Yeah, okay. It's got some volume though, and it just came down to new lows. So it's kind of that same idea, right? Where the thing is down towards lows off of volume. These things are perfect. They're vehicles for pumps, and they're vehicles for making money on both sides, as long as you're on the right side. So you got to be careful. I personally just doesn't fit like a lot of things I have really cared to look at, and the volume or the price action is like super wonky. It's maybe it's going to bottom here, maybe it's not. I have no idea. I would want a better feel of the actual company, how much cash they got, all those different things before I would play it. Market cap is at 6.5 million. It seems pretty freaking low. These are some micro cap companies that we're talking about, especially with how the markets have traded down. It's allowed for a lot of these stocks to trade substantially below their cash position and their cash value, which is pretty crazy, but this thing is cheap. If you have lights close to the PC and plugged in the same area, that's probably what it is. But I think I got a different light, but I can see, I can rearrange some stuff and like see if I can fix things in the coming days to avoid some of the buzzing. But I think that very well could be the problem in terms of the buzzing. And US seems interesting for a pumper. I think so. Mullen got approved for reverse split. The thing with Mullen, though, is that it's like, I don't want to say it's super played out, but it's kind of played out, man, a lot. A ton of volume, which is kind of cool. But this thing has been pumped and dumped a million times, which just kind of turns me off from playing it. There's a lot of bag holders, a lot of people who are like, Mullen's going to the moon. When you see that type of stuff, it's generally like, yeah, you'll get your moves up and down, but like, generally speaking, I don't care. I much prefer finding the stuff that's got, much less or a lot less bag holders that are in the stock and all that stuff. So Grom, I heard someone Grom is heavily shorted. Yeah, I wouldn't be surprised. It was a big time runner, in prior months over the past couple of years. So didn't know VGFC. No, yeah, I mean they all do that stuff. There's a lot of stocks that I've seen that and that happen in the past. So Grom, PXMD, BOXD, heavily shorted. Fluorescent or compact fluorescent has a lot of noise too. Well, then that's something I got to look a little bit deeper into here, because that's probably what's going on. I'm thinking. JSCE or JCSE. JCSE. That doesn't look terrible. The only thing is that the volume, they have this volume pump back in November, but it's just kind of like sitting up here. We got this low 57 cents. That's not bad. I mean, the risk reward isn't terrible on this. I'm curious what our cash is looking like, but that chart's not bad. The only thing that I would want to see, is some better volume, as of late. Like start getting up to some volume that we saw, like give us a little bit of a move closer to some of the volume that we saw back in here before that move and whatever. Of course, I just made a, but I want to see a bit higher volume. So like give me a spike of volume, some of these volume candles a little bit higher. And then it would be a great sign. But then again, sometimes with some of these, they're not always going to play out that way. So, but I don't dislike that idea. If they've got cash, market cap is at 11 mil, pretty freaking small. Shares float 4.49 million. It's a tiny float stock. These are great setups. I mean, I think to be honest, like if I was looking at it, I would probably want to have a stop under here. And, if you do a standard 2-to-1 risk reward, I think in small cap land, you can play a lot better than 2-to-1, especially these days. But if you do a standard 2-to-1 and you were to enter this thing like right there, stop loss under the lows, you're looking at all you need is a move to 116, which is like the highs that we saw right here. So it kind of makes sense. I think we can get a lot more. I think you're probably looking at, if you're looking for this, on a spike, your true spike, you're probably looking at 150 plus, maybe up into this area, which would be a 5 plus to 1. So these are the setups that I just love. That's why you can play them with, you can't play them with huge, in my view, you can't play them with huge size, but you can play them, pretty nice size. And then when you play them with that size that you're willing to, go down 25% on a position, worst case scenario, if you're buying a decent low, when you're risking 25% to make 100 plus, I mean, it's insane risk reward at least. That's how I view it. So, all right, with that said, I'm going to jump back to the larges and look at the overall market now. So, futures, quick peek. How are they looking? Just consolidating, nothing crazy there. Mara. This thing, I think if with Bitcoin looking really nice, Mara's looking like it wants to gun $9 to $10. I think it could go to 10 pretty nicely. I have a level here, support that was at like 940 on Mara. But here's Bitcoin. So here's Bitcoin's chart, the daily. And you're starting to get up into the levels that we haven't seen since August, which is pretty cool, I guess. And that flush down through 15s under 16,000 is pretty impressive to now being, back up over 22, which is pretty cool. I thought we'd see a bigger pullback, on this move up. We have not on Bitcoin. So these gaps I wouldn't really put too much weight in. I think that we thought about this back here. Like if it was going to hold these lows, back in here, we're like, hey, this doesn't look terrible for a move up towards 30K. And that's still a spot that I'm looking at, like up here for like the next like substantial resistance. There's not much volume resistance up here over 25K. So if it can clear up over some of these levels, this kind of consolidation area right in here, back from July, August, then I think we got 30K is in the cards. Market depending, obviously, if the Fed comes out, says some weird stuff, not weird stuff, says some crazy stuff, or we get some crazy data, maybe different story. But one of those things too that I wanted to just point out before we kind of go deep into like, I guess we're not going to go deep into like talking about stuff. I feel like we've been talking about this a lot, and I feel like way I look at things has shifted a lot over the past couple of months, more specifically, but over years of observing and years of trying to invest and do this and do that, right, into all these different things. The reality of this big picture trend line on the S&P, I think we can all pretty much agree on a couple of different things. Here's back at the S&P, right? We're wedged up, like we're ready to go. I have a couple levels that I'm watching pretty closely if we break up or break down, right? If we break down out of this trend line this uptrend, I'm looking for this 377, 370 on SPY. Below that, I'm looking down for 362. Up here, I'm looking for 410, then 430 or so. Those are the spots that I'm just like, in mind, if we break out or to the upside or downside. But I think that you're seeing a lot of people who are coming out these days and that are very, very much saying we're doing this or we're doing this. And I think the majority of people probably think that we're going to do this. I think it's pretty safe to assume that that's the majority. But it's funny how, especially these days on social media and stuff, there are very large accounts that make a lot of money. Let's say they day trade or they're investors or they do other things. They make a lot of money. And so they may say one thing or another thing, right? That is very influential in what their followers perceive, or their followers take it very, very seriously. And it's like a pretty messed up thing. In my view right now, especially with what things are going on macroeconomically, I would not be surprised like one bit at all if we went down to new lows and broke this down, or if we broke this to the upside. It would not surprise me in either way. And I'm not going to sit here and buy SPY calls or buy SPY puts out a month or two, because I'm going to be thinking that I know what's going to happen next and I'm going to get effed. Like I'm just going to get screwed at some point. And that's the problem, is that when you have a lot of people out there, you got people out there right now who are drawing in bullshit bear flags and bullshit bull flags on every freaking chart imaginable. And it's like, you can see it that way because you have a bias. I might see it that way as well, but I'm looking at that. The way I look at it, all I see here is that we have a tightening range and we've got a nice setup for a breakout or a breakdown. We got a big move coming at some point. That's what I see. I'm not going to sit here and say, oh, because of this, this, and this, we're going to go down. Higher likelihood we go down. No, it just leads people the wrong way, I think, especially these days. Having a general bias or a general idea of where you want to be positioned in asset classes and stuff over the coming, quarters, I'd say months, quarters, and years, that's one thing. But trying to predict these types of moves in a 1 month span, it's risky. You can do it if you're hedged or this or that, but you're going to get yourself screwed. And I've been screwed. I lost a lot of money doing it. And it's just not something that is, I care to do. So it's not something I'm going to sit here and be like, oh yeah, we're going to go to 4,500 and then we're going to dump down to 3,200. And then we're going to, you got a lot of people out there who are very, very adamant on inflation rising back up and think that it's going to get really bad. And then a lot of people out there saying, no, the top is in. Let's let the data come out and tell us what's going to happen at the end of the day. I'm skeptical on the whole inflation stuff coming in hot. I mean, it could come in hot, relatively speaking, where we get a CPI or two that comes in higher than expected. Like I can see that scenario. Here's the inflation numbers, by the way. I'll just pull this up. We got some time for the next CPI, but like, we compare this, right? You're lapping over, these increases the past year, which make it that much easier for CPI to come down. Now, again, you look at, everyone goes around, well, the freaking eggs, and look at the gas, look at this, look at the grocery store, my bills are going up. Yeah, no shit, your bills are going to go up. That's how it works. Like, just because we have CPI coming down doesn't mean shit's getting cheaper. No, it's still getting expensive, not as expensive on a year-over-year basis compared to last year, but it's still up 6.5%. That's frigged up. That's a lot of freaking money, right? That shit's going to cost more. So the rate of which it's going up is just coming down, right? That's all that matters. It's going to be interesting. I could see it. I really would, for me to believe the camp of CPI is with pressure to the upside in the next 6 months, maybe 6 to 12 month span, I would want to see, gas, oil really come back up for me to start feeling, oh yeah, this is much more likely now of seeing CPI, bounce back, or at least, maybe stay pretty, sticky to the upside. But if oil, like for example, was to get back up here in the 80s, inching higher, pushing up to the 90s, okay, we're talking, right? But if oil can't do that and oil rejects this area again, like let's say roughly into the next couple of weeks, I mean, the same freaking pattern is setting up, and it's like, it just stays weak. It's not going to help. This is only going to help bring CPIs lower or keep them relatively low in the meantime. Like, oil's got to get going. If you want CPIs to come in hot and you're betting on that and you're playing the big picture of like, oh, I think we're going to go down because CPIs, or I'm betting on yields, you can bet on that. That's fine. But you need, a lot of these things to play out. And if it doesn't happen, it doesn't happen. Don't just sit there and be like, well, this guy on whatever said it was going to happen, so I trust him because he's, got a verified check, which anyone can freaking buy. And even before that, people were buying. But besides the point that I see now is like, charts tell us what's happened, and they present patterns of what may be likely or potentially possible to happen next, or really the way I've been seeing it now, key levels. It's been key spots. We get to this spot above that looks bullish. Below that looks bearish. Like, these are the spots to be watching that could be, sentiment movers or key movers for a continuation of upside or downside moves across whatever we're looking at. So that's been the deal. I think across the board that, everyone wants, and it's clickbaity, and it's easy to get clicks and attention when you talk about your views about the market and this and that. Yeah, I get it. But, it's funny when I just look around and I see a lot of people, and especially people who are bearish right now. And if we go to new lows, great, great. It is what it is, right? Great opportunities, I think, for a lot of people who are young to start, picking up certain things that they want to buy long-term, whatever. But if we don't, you've got a lot of people who have suckered their followers into just expecting new lows or expecting this or expecting that in whatever time frame they're buying puts out a month or two, thinking that they got plenty of time. Meanwhile, we could go up and then go down. Who knows the direction of where we go. But it'll be really interesting to see what some of these people are, saying. And then again, right, that's kind of how things go in these markets, right? When you have these bear markets and, people are like, people want to catch on to that side of things, and it gets more attention, I guess. But let's look. LGMK for next small cap play. Let's say, look, LGMK really quick. LGMK. Oh, yeah. I'm adding that to the list. That's a nice one. Small cap list added. Because look at that. Came down, got some high volume coming in. That looks pretty interesting. Huge just downtrend for months, like years now. And volume is coming in, interestingly enough, right in here. Market cap is 3.3 million. I like what I see. WBD. Beautiful break of the falling wedge. Bounce this bad boy out. Look at that move to the upside there on WBD. That's a pretty impressive move up. Now you got this, what I've been seeing across the board, a lot of stocks. I think a lot of stocks have this similar setup where Warner Bros., we were talking about that like a while back. This thing had a crazy move just to finish off the year into the beginning, or to finish off last year into this year. But when you get these types of setups where it pushes up, consolidates a little bit, or kind of chops around, the move slows down, then it has one of these huge wicks to the downside, and then it gets bought up immediately. That's like, that's telling you something right here. So obviously you want to see this thing getting up into like the mid to upper 13s, like over some of these highs would be pretty cool. If it gets up over 1375, that's great. And then there's even a gap right here, which is all the way up to, like, technically speaking, 1650 or so. This thing looks pretty good. I like what I see. This could even be, to be honest, I wasn't looking close enough. This could have been a potentially position I could have added into the Robinhood portfolio. Grab a quick 100 shares. I'm not sure what the option chain looks like, but grab 100 shares and you can sell covered calls on it, or, multiples of 100 shares, and you can sell covered calls potentially on this thing. And if it rode up to like, $20 or something like that, that's sick, of a move. I like what I see. Amazon looks pretty good if it gets with the 50 moving average. Let's take a look. AMZN. What do we got? Amazon came down, bounced in the 80s, which, by the way, this is like COVID lows, I believe. This low right here was COVID lows. It pretty much held COVID lows, which is like, kind of makes sense as a pretty good risk reward spot. If you went long there or bought Amazon there, you might be looking, well, you're probably feeling good for now. Amazon, let me pull up the moving averages. I've got them hidden for now. Here's the 50. It's up over the 50. You've got some gap action right here. The thing about Amazon, though, is the earnings are looming. So if it wants to ride into the earnings, run up into the earnings, we might have a couple more dollar move up into the low hundreds. 109 or 110 is like technically that gap fill. That's a long way to go. It could happen. I don't put it past it, but earnings coming out here February 2nd, I believe. Thursday, February 2nd is what I'm seeing. So not this week, but I believe that's next week, like the next week after this week. On Thursday. So there's plenty of time for a push. Got 5 days plus 3, 8 trading days. It could do it. But if we would probably need to break the trend line on the S&P for that to happen, but it looks good for now. We'll see if that continues. Thoughts on Baba, Ryan Cohen. I haven't been following that situation, Ryan Cohen, but I will look at Baba's chart. Let's see the chart on big old Bob's. Oh, shoot. Yeah, that's impressive, man. That's a breakout of that downtrend here that we kind of had. That's a big trend line that wasn't tested. You got to go back to 21. So I don't know if I really care about this trend line so much, but that was a trend line I had on there from a long time ago. It finally broke that, which is cool. I mean, maybe see some backfilling here, but it just pretty much filled this gap back from, looks like early July of 2022. Filled that gap pretty much. This thing looks pretty strong. This thing looks pretty freaking strong. If we look at the volume profile on BABA, you don't have much volume here up over 120, up into like the 140s to 150 range. There is some room. If it wants to get going, there is some volume we can fill in on that volume profile over the coming weeks. This thing looks pretty strong. I will say that at a minimum. A lot of people say the market's going to crash, but what's the catalyst? I think that's the biggest thing. Everyone's looking and they're trying to pull catalysts. And to be honest, if it's going to crash, no one freaking knows the catalyst. You know what I mean? Like, that's the reality. You don't know the catalyst. And if it's not going to crash, you know, if we're going to go lower, but we're not going to crash, you know, or have varying degrees of pullbacks and whatnot, it could very well be that there is no specific catalyst and things just kind of slowly deteriorate, earnings deteriorate, and we kind of just trade lower over time. Like, it might not be a flashy situation, right? Which in that scenario, you know, to be honest, a lot of puts will get crushed because put premiums are super high right now. They're jacked up. They just generally have been jacked up. I guess it depends upon what you're looking at, but they've been generally pretty jacked up. And if that just kind of like slowly happens, you know, you're buying puts and whatnot. If you're shorting shares, that's one thing. If you're buying puts, those puts are bleeding with decay, with the decay factors. It might not be the best, you know, the best scenario. But we will see. No one knows what's going to happen. Yeah. Place your bets, trade your own book. Exactly. People are trying to quit. I have to say the Twitter stuff is pretty frigged up. It's pretty funny. I think it's more of a comedy, though. Like, if you were to hang out and just look at it, you get yourself caught up in sometimes, but, like, it just, what it comes down to is, like, sometimes you can find some crazy stuff, especially when you find people who are, like, big followers, adamant on moves, adamant on this and that. Screenshot that stuff, put it in a folder, and then look back at some of these accounts and look back at some of these things in a year when you got nothing better to do. And it's kind of, you'll look back and laugh a lot of times. All those big guys on all the Atlas trading guys, if you guys have seen to follow that story, I haven't followed it super close really since, but all those Atlas guys that were green every freaking day for years straight and making millions of dollars off of these small caps and making penny stock calls left and right. What was happening, guys? They were just pumping this shit and dumping it into their followers, some to varying degrees, but that's how they were making all their money. When you load 1 million shares of a company and then you pump to your followers and you dump for a 2-cent gain, oh yeah, you'll make a few bucks, but if you do that 1,000 times over the course of a year, you'll do pretty freaking well. And it compounds, right? You can buy more shares next time, you got more money. So, so like, it's funny. And you look back a couple of years later, if you thought that something sketch was going on, well, guess what? They all may be going to jail, or they're at least, you know, getting screwed by the SEC. The SEC found out and the truth came out. Whether they get truly, you know, screwed and put in jail or whatnot, doing time or whatever, I don't know. It doesn't matter. Those guys are never going to be able to come back on the platforms and have the same type of influence that they once had, because their reputations are ruined because of the shit that they did that was behind closed doors, that really wasn't. It was being recorded and stuff. The stuff that they said, you can never come back from that, you know? Market's pricing the cut a little early. I think that's possible. I think that's very possible. And to be honest, the way the Fed has been talking, unless shit got really bad, which job market wise and like maybe inflation wise, in terms of like that came down way, like if CPI comes in crashing low, like the next like 3, 4, 5 months in a row, and like we're getting closer to that 2%, like we're like beeline 2% is in our grasp, which I think is a bold statement as it is. But if we get there, let's say oil goes lower or whatever, and it helps get us there, if that happens, maybe. But I would have to say the markets is looking ahead. How far ahead, how early, how late? There will be some backfilling on, I think, on rates at a minimum. But and is the Fed going to start cutting? They're saying they're not going to cut. The problem is that if they don't, is it going to probably cause more problems? Maybe it's a bigger problem later on if they don't cut early enough. You know what I mean? But they seem to have their feet dug into the sand. They're not moving right now. And I don't think there's a reason to expect that them to budge unless we had continuations of data for the next couple of months. Like we get to March, we get to April, and that data is like really coming in low. Like, hey, the Fed, something's going on here. Okay, maybe. But if it's kind of coming in, just going lower and lower, little by little, nothing insanely crazy, good chance that the market's getting a little overexcited on a cut. Just as it got probably a little too excited about how much we're going to go up. Now some movement down, and we probably end up somewhere in the middle of how long rates stay at whatever. I think personally we're probably looking at, depending upon the March data, 25. Most likely a 25 basis point hike coming up in February 1st, and then March 22nd is the next Fed meeting. I believe that will probably be a 25, probably, who knows. But the Fed seems to be standing their ground, and I can't imagine them cutting or them pausing. And it would be, unless the data is really getting bad in terms of the job markets and other things that are concerning, that's like really getting bad, which I don't think it's going to happen that fast. It's been taking a lot longer. The story of this past bear market, it's been like things just taking a little bit longer than people expect. We've never had a crash, right? It's just kind of bleeding, right? Wouldn't be surprised if they do 2 more hikes and then they maybe pause the next meeting, which I can pull up their current projections. I think that's what it was last week. They got 9-10 days till the next meeting. They're projecting right now that we see, holy shit, a 99.8% chance of a 25 basis point hike. And there's a 0.2% chance for those out there who think they would potentially not cut or they're not going to hike. They're going to just pause. There's a 0.2% chance that they pause. But it's pretty funny how this was like 97 and like 3% that there'd be a 50. It's pretty much set in stone. They're going 25. The March data, the March meeting, we kind of have this 17% chance that we get one hike between now and March 22nd. And then there's 82% chance that we're in this right here will be a 475 to 500 target rate, which we're currently sitting at 425 to 450, which would equate to 50 basis points of hikes over the course of 2 meetings, most likely split up between 1 and 1. Now, this is market maybe getting ahead, or maybe someone knows something here. I don't know. There's still, February, we get CPI for January, and then March, we get CPI for February. There's still going to be 2 CPIs to come before the March meeting. So again, a lot can change pretty fast. And so, these numbers can change pretty quickly. And if the numbers come in hot at all, then great, not great, but whatever. Then this is probably skewed towards 50 basis point hikes, maybe 75. Maybe there's a 50 and a 25 or 2 25s, or maybe there's 3 25s over the course of February, March, May, the way things play out. But that's where the market's sitting at right now in terms of pricing things in. VIX, we can look at the VIX, and then Catalyst. Catalyst is FOMC. People stop spending. Keep in mind, Fed really couldn't afford to pull a market right now. They can't. They absolutely cannot. And so if we do rip face to the upside, that's not going to be great. And the Fed's going to be like, what do we do? It's like we've been saying, it's probably not healthy. It's definitely not healthy. But if it does, it does, The people will be pretty surprised and, whatever. The VIX is below the 50 moving average right here. And that's kind of been, honestly, a pretty good indicator so far the past, month and a half now. Once we got below this back in October, we have just stayed below. So that's right now at around 21.80. It's like $21-22 on the VIX. Above that, which also happens to line up with a spike from last week on Thursday. Above that line, that's pretty much your spot on the VIX to be watching. So keep an eye on that 50 moving average on the VIX. But until we break above that, the trend has been down, whether you like it or not, it's been down. We see a 50 basis point hike. It just seems unlikely now based off the market. And it's been these Fed can do what they want to do. It's been unlikely that we're going to surprise substantially. Now, if it was like 50-50 between, 50 and 25, okay, then we got a question, right? But the Fed has been pretty transparent on these, generally speaking. So I don't think we're going to surprise on that front. It's probably going to be what the market thinks is going to happen is probably going to happen when it comes to the Fed rate hikes. Catalyst, FOMC, Mesa, MESA. This thing I think has been doing pretty well, right? Past couple. Oh my goodness. Yes, it has. Yes, it has. Who would have thought that thing would have gone down literally, end of the year to $1 and then ripped to $2.50 in a matter of 3 weeks. Freaking ripped to $2.50. You're trying to hold 225 now. So if it holds 225, this right area right here, it looks like it wants more, whether you like it or not. Next resistance spot, 315. There's going to be a tougher spot up in here. This will be your next really key spot. So up over 3, I would be starting to get more skeptical on this thing. on Mesa. But it looks good as long as it holds 225. It looks like it wants to go. 150 shares, talked about it a week or two before on WBD. That worked out nice then. That's working out nice. Earnings next catalyst. Big tech hasn't been hit hard enough. I mean, we'll see what happens. This earnings cycle is going to be fun to watch. I mean, I think we're going to get, we'll see Tesla this week. I think Tesla's going to be a pretty good one to start kind of setting the tone. Obviously, like you're going to still have the outliers where like, you're going to have some companies that have horrible earnings and it's going to be like, well, that's just trash. That thing is selling off no matter what. And then you're going to have some that kind of come in line and maybe, had some heavier pressure and maybe just actually kind of bounce back and do decent kind of in that time span. So that's kind of my take on it. Obviously, if we get a bunch of like the big tech names all at the same time getting some bad earnings, then we got a pretty big pressure on the market. It's going to be tough to overcome that. We've seen the market do that, so it could. But Tesla this week, first spot to watch right here on Tesla is this like 137 area. If it gets over 137, it might have some legs to go. I don't really necessarily care. Maybe Monday, maybe Tuesday, it's worth a look. But outside of that, Wednesday is going to be wonky going into earnings. I don't really care. Just going to watch and observe and see what happens. And it should be fun, to say the least, on Tesla. So that thing is going to be fun to watch on Wednesday. Outside of Tesla, look over at some of the other large caps and you look over like Apple, for one, I think is where people are looking for like this thing should die. And it has yet to do so. And if you look around and you say, with just generally speaking, people like Warren Buffett, some big time funds, big time money is jacked up in Apple, like huge position size, like 50% of portfolios, 60%. I think Warren Buffett's got like 60% of Berkshire is in Apple. Like that's freaking wild. That seems high. That seems way too high for even a guy like him. You start getting some hits on a stock like this, people start pressing the panic button. Whether the market has to go to new lows or not, obviously other stuff can hold up better than this and, whatever. If this thing starts to really unwind big time and drop off a cliff, people are going to be shitting their pants. And that is would be a much more welcome sign to start saying, hey, I want to start buying some Apple. I want to start buying the dip. And, I feel much more comfortable we're getting closer to a bottom when stuff like that's happening. Does it have to happen? No, it doesn't have to happen, but you kind of would want to see stuff like that happen. Tesla, obviously, but Tesla's pretty volatile and it's kind of I don't want to say it's a meme, it's memey, but like it's kind of this like a lot of retail money is loaded up in Tesla and it's kind of like their ticket to retirement, their ticket to making a ton of money and stuff. And the bus has potentially come and gone on that big time gain. You're maybe not going to see the types of returns you saw on Tesla the past decade ever again in terms of how fast, of what we saw, even the past couple of years, really the past like 3-4 years on Tesla. Who knows? But generally those things get hit first. And so maybe Apple's like just sitting back and waiting for more, right? We'll see. Don't want to force any trades. Going to trade some futures, look for some option swings. Yeah, I think that this week is going to be, in like a couple weeks with earnings and stuff, it's very selective weeks. I just think that less is, for me, it's less is more. We'll kind of give it a better go at less is more. Looking for some of these kind of crazy wicks up and down that we see some crazy moves on some of these things, like we kind of saw on that. And that we talked about this on Saturday's video. That NVIDIA move, holy shit. This thing was nuts. Now, looking back, you ever see that again, that's like an immediate buy. But this move right here, when it had this huge wick from like 169.25 all the way down to 168.25, in a matter of less than 5 minutes, that was a 5-minute candle. It dipped down, broke those lows, and then hit that area, and then bounced, and then had a monstrous run. Seeing and just keeping an eye out for stuff like that. Market makers are messing with people, and I think hitting a lot of stops and just kind of keeping this thing as difficult as possible, up and down. Just like if you think about it from a bigger picture perspective, if we are going to go down, right? If we are going to break down on the overall market, let's say the S&P, breaks down and goes lower and breaks this trend line here. If we're going to break this trend line and go lower, like perfect play, like great game by market makers here to rip us back up on Friday, get people feeling pretty good, get us like, oh shit, maybe we're going to actually break back out here. And it's just playing a whipsaw back and forth. And this is kind of this is just the game. I think that right now, if anything, trying to get into the mind of where like the maximum pain is going to be, what would just piss people off, what would screw people the most. It's not maybe not looking for the cleanest possible moves, like thinking that way, just so that you're prepared for the potential. Like, hey, if I'm thinking this right now, good chance a lot of people might be thinking the same thing. What if I'm wrong? Maybe that means there's an opportunity over here. And if I'm wrong, what I want to see to tell me I'm wrong, look for that, get the trigger, and then that's the opportunity. That's kind of been working lately. It's kind of been working. It's not maybe as clean as you would have you wanted to see. Wheat, looking to reverse its trend. Let's say look at wheat. What do we got on this bad boy? Yeah, it's starting to try to do something here around the 730 area. Crazy move down on wheat, man, back here in the summer. June, July, my goodness. Pretty impressive move there on wheat. We want to see it get it back above that 50 SMA. It would be a good start, back up over 785 roughly. If we get a 50 basis point hike, we're going down. 100, yeah, for sure. But it just seems like we're not going to get that from the Fed here next week. Fed want to keep inflation down. They have to keep the market down too. Exactly. That's the thing. So here's my theory on that, though. Of course, anything can happen. I'm not necessarily betting heavily on this idea with any short-term stuff. But the thing is, in the next 6 to maybe 9, 6 to 9 months, I keep saying this stuff, but we're lapping up over these inflation, these big CPIs. You get 9 months down the road, now we're comparing this past year to, lower and lower CPIs. Now we start to see the CPI maybe kind of get down to maybe in the 3, 4, I don't know where it gets to, down to let's say the upper 3s, and it just doesn't get down towards that 2, right? If market's plummeting to lows in that span, that's what can help us get to that 2. People feel like they have less money. It's just going to add to the kind of the contraction, the environment we're in, right? That helps. Market goes to new highs or breaks out or starts getting stronger in the next 6 to 9 months. There's a window there where like maybe inflation looks good for a few months here and starts coming down, and like everyone's like, oh, cool, market goes up. But then all of a sudden we get to a point and we're like, oh shit, we got some pretty bad earnings concerns already. In a year from now, probably even more concerns. And if inflation never gets down to towards that 2% target, and we're like, it just never got there, and we kind of have to stimulate again or we can't be going too hard here because we're getting some job market hits in a year from now, you can see where the Fed gets into a tough spot, which is why they would much rather front load it, hammer us down, and then be good. The question is, do we get there? Does it happen? I think if I had to just look at these charts and say to myself, next 6+ months, I don't think that's a concern. But as the months go along, you'll start to get a much better feel for where we're at and where the CPI is, and then where the potential, like, are we on that nice path towards that 2%? Is that goalpost going to get moved? Are they going to start saying, no, actually 3 is okay or 2.5 is okay? Where are they going to move their targets and whatnot? I don't know. But that's kind of like the way that I'm thinking about it. In terms of the Fed, they may have done enough. They may not have. I just don't think that there's a way to know right now. There really isn't. It will become increasingly clear 3-6 months from now, but just right now, I just don't think there's a way to know. Because another factor at play here is the housing and the rental markets. I mean, that stuff has a monstrous lag on CPI. So you start talking about that and playing the housing and rent inflation, all those things that are coming down, which they are coming down across the board now. It's just taken a long time for that to come down. First, it was housing prices, then it's the rents. And then it gets into the CPIs like months later, the way that the CPIs are calculated, which is a big piece of CPI. That's going to help 6 to 12 months from now. But then where do we get to? Do we get down to that too? If we don't, maybe the Fed needs to technically overshoot it. Maybe the Fed needs to get us down and overshoot the CPIs lower, just so that as we kind of come back into that balance back isn't enough to kind of get us scared again and have them have to, retighten again or whatever. So they can kind of overshoot and then maybe stimulate slowly back into things and kind of even us out. That's what they're looking at, what they want to do in terms of that softer landing. And it's probably not going to be soft, but whatever. But it's going to be fun to see what ends up happening. Apple goes down, it all comes down. Yeah. Tesla drop prices 20%, deflation versus inflation. Tesla, the funny thing about Tesla, though, with the 20% drop on the prices, is you look at it a couple different ways. I think we talked about it, I think, a week or two ago. You know, does that get them kind of like nailed in terms of increasing demand? Like we talked about this, is this a play by Tesla and Musk and whatever to say, hey, we know we're screwed? Because Musk has said on Twitter multiple times that, hey, if the Fed raises rates, this is not going to be good again, right? And they've continued to do so, and they will keep doing so for the next next two meetings. I think at least it looks like right now, at least one, maybe two, maybe more. Is he betting on things going to shit in the next year plus in terms of recession, job market, all that stuff, and knowing, hey, if that happens in a year plus, no one's buying a freaking Tesla. Let's cut the prices. Let's get these things moving now as much as we can on that last little hurrah before we get screwed and have all this inventory or then all of a sudden get rocked by earnings. Let's sell this shit, move it through, hold cash, be in a nice position to kind of ride out the recession and be okay. If that's his idea, that could be one of the reasons why he's cutting prices now. I'm sure there's a lot more that goes into it. I'm sure they have a lot more data behind the decisions. I am obviously no idea what I'm talking about, but we were thinking like, is that an idea? Is that what's going on? And it's funny, we were talking about how look over at like CarMax, look over at Carvana, at least a week or two ago, you can be finding Teslas for like used that are going over MSRP. You're getting Tesla. You can buy a new Tesla for less than what these sites are selling these used ones for. And it's like this massive mismatch. He's wiping them out. All the Carvanas and the CarMax, all these used car dealers who have bought these Teslas now from people used, expecting to be able to turn a few dollar profit on these things because they got some decent value. When you drop the prices of the actual vehicles new, kills the market on that stuff. Those guys get screwed. Just wipe them out. Does it matter to him? No. He has to run his own company. But it's just crazy how that kind of played out too. So that's the deal. Got to think outside the box. Not to think with the crowd. Yeah, I think that's to some degree. To be honest, the crowd idea is there's nothing wrong with the crowd, right? But it's in inflection points. It's in periods where if you're trying to time the short term crowd is usually the crowd that gets screwed. That's what it's about. So if you're looking at puts for next week, I don't know. I have no idea. Maybe that's actually a good play after Friday. Who knows? But if you're looking at puts for, if we're Tesla's a perfect example. If you were looking at Tesla puts here in early January after the massive move down, I mean, you might have gotten a day trade here and there. Sure, that's one thing. But momentum trade, day trade, that's one thing. But if you're looking at swinging Tesla puts for a move to $80, you might get it. You just might not get it for a little bit longer. You know what I mean? And you had a massive move down. The crowd, everyone was so freaking bearish, so negative on Tesla 3 weeks ago. Now what? It's bounced back $30 or it's bounced back, okay, $25, $20. You know, great. You need that to happen for it to ultimately go lower, most likely, right? The thing is not just going to fall off the face of the earth. It pretty much did. From 310 to 110 in a matter of just like 2-3 months. That's freaking massive. Tesla scares me into a lot of trouble. It's a sketchy situation, I think, to say the least. But it's going to be a fun one to watch, especially with this earnings coming up too. Bulls versus bears, right? The scene, the crime. That's exactly what it is. All right, guys. With that said, I'm going to wrap things up. We will do a live tomorrow for Power Hour. So that's about 2 p.m. Central, 3 p.m. Eastern time tomorrow, and then we'll do one on Wednesday and Friday. So Monday, Wednesday, Friday, like usual. We're kind of back on our usual routine for now, and hopefully I'll get the mic. I'll make sure the mic is in as best position as possible. I think it might have to do to the lights because I got a new light. I got rid of one. I got a new one, so that could be the problem. And I'll just double check and see if I can fix things up going into this week, and we should be good to go. So hope you guys have a great week. Have a great rest of your Sunday night. I know it's getting later and later, but I will see you tomorrow. Peace out.